This changes everything. I'm your host, Steve Van Metre, and thanks for joining me today. A secret bank tests show the Fed is preparing to launch a digital programmable dollar. Let's go to Bloomberg, where we picked today's story up with a headline that Wall Street tests crypto dollars, with Fed defying the FTX gloom as Citi, Wells Fargo, among banks participating in this 12-week test. And many of you told me that this day was eventually coming, and it wasn't that the fact that there would be a digital dollar. My concern is how they're going to implement it. And when we get into that, you're going to be shocked at what the Fed is planning. And something else that's coming up with this show is, for the first time ever, I've got a paid sponsor. Now, I've turned away hundreds of these requests, but many of you have been asking, will you cover this sector? Will you find us some really cool opportunities? One came across my desk that I couldn't pass up, so hang on. Later in the show, we'll get into that. But first, let's continue on with our headline, as the Federal Reserve Bank of New York unit will partner with almost a dozen banks and other financial institutions to test out digital dollars, a sign that Wall Street intends to push ahead with its cryptocurrency agenda despite recent upheaval in the market. Banks including Citigroup, Wells Fargo, will work with the Fed's New York Innovation Center on a new network as part of a 12-week test. The technology, known as a regulated liability network, will allow banks to simulate issuing digital money. So I want you to first understand that they're going to actually create digital money in this test. But that's not the part that scares me. That's not the issue. Let's keep going, because this is going to blow you away. Again, they allow banks to simulate issuing digital money representing their customers' own funds before, get this is the part that really matters now, settling through central bank reserves on a distributed ledger. Again, let me read this again. Settling through central bank reserves. Now, if you say, I don't know, what is a central bank reserve? Well, think of this. It's assets on the Fed's balance sheet. Again, what do we look at when we think of a central bank reserve? The Treasury securities and mortgage-backed securities. So this is really interesting, because what the Fed's looking at doing is, again, you think about QE and QT and the Fed expanding its balance sheet, and we know in the future the Fed's going to have to do this, but what if they had a ready buyer for that debt? Well, they're going to simulate the creation of dollars. Those digital dollars, will have to be backed, get this, by central bank reserves, which are Treasury securities and mortgage-backed securities. And if this pilot test works, in the future will open the door for the Fed buying up an unlimited amount of U.S. Treasury debt. And what will it be backed by? That's right, your money on deposit at the banks in digital form. Programmable U.S. dollars may be necessary to support new business models and provide a foundation to much needed innovations in financial settlements and infrastructure. And what concerns me is this term programmable, because you may recall, I think it was last year, that China tested a currency, a digital currency that expired. It had a clock on it. So if you receive some of this special currency, it may have only had a 30-day clock on it. And if you didn't spend it, it went away. And that is what concerns me, because if we now see a deflationary bust, what the Fed looks like it's preparing to do is have the banks issue digital currency. They'll back it by debt issued by the Treasury. Again, Treasury spending. Why would they want to do that? Aha, fiscal stimulus. And then they have the ability to program it on top of that, perhaps make the money expire to force people to spend it, or even limit how they spend it. So you think about this from a benefits standpoint, someone receiving, say, a food stamp, a digital food stamp that could only be used at a grocery store. Well, now they could program it to say you can only buy certain things with it. You go to the register, you have something that's not approved, and the transaction doesn't go through. This is just the beginning of where the government's going with this, and that's why I've not been a big fan of a central bank digital currency, but now you're starting to see it in real time. Going on, projects like this that focus on the digitalization of central bank money and individual bank deposits, that's a bigger problem here, could be expanded to take a broader view of the opportunity being for the government. The tokens involved in the test are different than the FTX token. Each simulated digital dollar will represent $1. So again, you can see the setup here of what they're testing. This is just a beginning of where this is going to go. We know it'll take a long time for the Fed to implement this model, but we should all be concerned in keeping a close pace on this. Now, as we turn to the economic data, we look at retail sales coming up today, and there's some hope, but also some actually bad news here that's showing the economy is slowing down, that inflation is coming down, perhaps even dovetailing back into the Fed's agenda to force the usage of digital dollars to create inflation. Walmart sales rise as retail giant gains more shoppers as the largest retailer by revenue raises outlook, but that's generally not actually a good sign, because when we're in periods where the economy slows down and inflation is hot, guess where people go? They go to Walmart. The country's largest retailer by revenue said Tuesday that households continue to face pressure from rising food prices and lower income shoppers are eating into savings. Executives said shoppers are spending in some categories as they hunt for deals, which has lifted sales at the discount store, but the company remains cautious on the health of the U.S. consumer over the next year and is working to lower prices. And as we'll see a bit later, they don't have to do much work on that. Prices are indeed coming down. But one thing that boosts Walmart sales is grocery. So when we look at other retails like Target that don't have a big grocery footprint, we get a bigger, completely different picture of the U.S. consumer. As Target earnings, sales sapped as consumers pull back. Retail are missing quarterly expectations, and Target executives said that sales and profit trends worsened in October and November, with guest shopping behaviors, get this, increasingly affected by inflation, rising interest rates, and economic uncertainty, telling us what we should expect is demand to go down. And indeed, Target executives echoed that by saying consumers are waiting to purchase items. Again, not something you do in a booming economy until they spot a deal, buying smaller pack sizes and giving priority to family needs. Sales of food, beverage, beauty products, and seasonal items remain strong. And if you're wondering why beauty products, well, think of it this. When do people tend to buy that? Not when they're home all day, but when they go back to work. And now that takes us into retail sales, which at first looks good, but perhaps is not. As U.S. retail sales rose 1.3% in October ahead of the holiday season, as consumers spent more at auto dealers, furniture stores, grocery stores, but here's the big one, gasoline stations. And keep in mind that 1.3% is not adjusted for inflation, as higher gasoline prices and increased auto sales reflected easing supply chains boosted October retail spending. But maybe they're trying to get more of their shopping done ahead of time, that's taking away spending from December and November and shifting it to October. So that is a factor here. And I want you to see the experts are kind of grasping this, wondering, was this boost actually transitory? Is the demand going into November and December going to be strong? Yet we're hearing from retailers right now like Walmart and Target saying, look, there's demand in certain places, but broadly demand is starting to fall. And of course, we know that this has a lot to do with the stock market. And here you can see on this chart, advanced retail sales in blue shown on a year-over-year rate of change against the Wilshire 5000, also shown on a year-over-year rate of change, that when the equity market heads lower, retail sales tend to fall with it. But the risk here, now what's interesting, if you go back and look in this chart in more detail, you can see periods where there's big bear market rallies or melt-ups like we're on the cusp of now. And if retail sales continue to fall despite a big increase in the market, it's telling you exactly what you need to know about the broad health of the consumer, and that it's poor, and then that big move in the market will eventually get reversed. And something else that validates that inflation and demand is slowing down is we have export prices on down 0.3%. And look at the year over year falling from 9.2 to 6.9. And how about this? Import prices, which is a much bigger factor, down 0.2%. And look at the import price index on a year over year rate change, 6 down to 4.2. Now you might say, what does that matter for inflation? It matters in a big way because the U.S. economy is is very sensitive to import prices. Here you can see in blue on a year-over-year rate of change against the CPI index, and telling us what we know is that as import prices continue to flatten out, it means the CPI is headed lower. That means rates are headed lower, and it also means something else is likely to do really well, and that's gold. Here we can see with this headline that gold steadies as bargain hunters see off the dollar's advance, also telling us the dollar is likely to head lower. The gains in the dollar and U.S. yields were weighed on gold, as we note from Jim Wyckoff, the senior analyst at Kitco Metals. He said gold prices could go sideways to higher in the near term, and I think he's right, as gold appears to have strong resistance at 1800 with decent support at 1750, as we note that a potential melt up here, if rates come down, could send gold much higher. As Fed Vice Chair Lael Brainerd said on Monday when she joined her partner on the board, Governor Christopher Waller, indicating that the Fed is ready to begin moving in smaller rate hikes while still emphasizing what Brainerd called the central bank's resolve. And while gold is considered a hedge against inflation, rising rates tend to dull the bullion's appeal as it pays no interest, but falling rates tend to actually be pretty bullish for the metal. And so that's going to take us in to our sponsor. And now I want to get into this. Before we get into who they are, I want to see the opportunity here and what's going on in the gold space, because this chart here shows the dollar in purple against gold prices. And what do we note? That in periods where where gold prices is rising, you tend to see the dollar falling or remaining very weak. So we've seen a big move here in the dollar, suggesting that the dollar could be coming to a peak. And how might we know that? Is because even though central banks don't have control of currencies, we do tend to note that the dollar tends to weaken when the central bank reaches a point that is pausing or starts to cut rates. And how we know that? Well, we can look here at the 3-month 10-year yield curve against the broad dollar index. So what we have here is the dollar index in blue, and now we have the yield curve, the 3-month 10-year. Notably, when it's inverted, you see here going back into 2007, the dollar went down as the curve steepened and rates went down. We see that happened again here in late 2019. The curve was inverted, the dollar went down, if not for the pandemic. Notably this, you see the curve steepening, the dollar comes down. Here again, we're inverted, suggesting that, of course, we could see the dollar weaken here. And it makes a lot of sense, because the dollar, when it sees rates fall, it leads to more credit creation, and credit creation spurs dollars. That takes pressure off the rising dollar and means that gold could be facing a big move higher. We also can note that when we look at the CTA, or the machine positioning, that they're very short still the metal, and if prices go just a little bit higher, we start to see it break over 1800, these machines will cover some of their short positions and eventually move into long positions, driving price even higher. So what I want to talk to you about today is junior miners, because I think there's a potential opportunity here as we look at this chart where we see gold, and in purple we see junior miners. And what is interesting about junior miners is they're a leverage play on gold, and that's all that really matters here, because when you put together the broad narrative, what do you see? The Fed facing a point where they're likely going to pause and potentially start cutting rates. We know that based on the Eurodollar's futures curve and on the 3-month 10-year curve. That means the dollar is likely to weaken. The machines are going to start buying and short covering in a much bigger way. And that opens our opportunity for our sponsor today, Zacatecas Silver. Now, Zacatecas, I'm going to give you the website and everything, but if you're in front of your computer, pull up the symbol, because we're going to get into this in a minute, is ZCTSF. Again, if you're in the U.S., that's ZCTSF for Zacatecas Silver. Again, I'll put that in the description and on a pinned tweet. And if you're in Canada, look up the symbol ZAC on the TSX. And now what's interesting about this company and why I think there's such an incredible opportunity that I wanted to show you is because in my experience with my own clients, I have a lot of them in the resource business, and they're in the oil and gas, and they're in the gold mining. And what's key here is experience. It's not just the ground that you have, it's the team you have. And Zacatecas Silver has a really impressive team led by this guy here, Brian Susorchuk. And this guy was a former president of K92 Mining. Now, you probably never heard of K92 Mining, and I didn't either when I started looking into this. But from a chart perspective, you can see right here, he took over this K92 job, and look, from a low of 31 cents, it's now sitting over $5. This guy is the head, and he brought, of course, his team over from K92, and they're running Zacatecas Silver. And one thing that we look at when you want to know is something worth looking at to invest in is what are the leaders of the company doing? Are they buying the stock? And in case Brian is, and notably he's buying it near the lows here. So he's taking up a lot of ownership in his own company. And this is really important because in my experience with my own clients who invest in their own projects, where they're doing the research, whether it's in the oil and gas or they're doing the tests in the gold field where they're actually drilling the holes and pulling and counting and figure out how much gold is in the ground or how much oil is in the ground. When they invest their own money, it tells you a lot because it means they think the probability that it's going to pay off is going to be big. But it's not just Brian and the team that's buying, and you can look that up at CanadianInsiders.com. There is a website that tracks insider purchases of Canadian companies. Look at this. The largest shareholder is Alamos Gold. Now, if you don't know who Alamos Gold is they're the people who actually bought this property and started developing the project. They started drilling all the holes. They started figuring out where the gold is. They began the project, and then here's what they did. They actually sold the whole thing to Zacatecas Silver, and they didn't take money for it. They took an equity stake, the largest equity stake in the company, again, suggesting and telling us what they mean is they trust Brian and his team to get the gold and silver out of the ground and execute it properly. And they're not the only ones that got the attention. How about this guy here, Eric Sprott? Now, if you don't know who Eric Sprott is, he is the Eric Sprott of Sprott Gold. He and the management are also, he personally bought into this, and that is a huge endorsement. And their big project coming up is Esperanza Gold. Again, keep in mind symbol ZCTSF. And this is a big project, but it's not just the project I want to talk to you about, it's the opportunity. And that is when we look at the charts, that's where we start to see things get really interesting, because when we look at this from an investing or trading perspective, the opportunity here in Zacatecas Silver is pretty big. And I know you're thinking, wait a minute, I thought you're bullish on bonds. Well, guess what? You know what else goes up when bonds go up? That's right, gold and gold miners, this being a leverage play. So what I want to first show you is this chart of Zacatecas Silver, again, ZCTSF. That's right down here in the green and red. And against that is gold. So again, all you're seeing with Zacatecas Silver is what we'd expect, is that it is a junior miner, a leverage play on gold. So if gold is going to go up, you should see Zacatecas Silver go up even more. Now, let's go ahead and remove gold off this chart here so we can look at a little bit closer, and let's overlay the same sort of technical things we look at on the Sunday chart show. We want to notice that the MACD is rising, and that's strong, and it's got a positive cross. We notice right now the RSI is oversold, but that's okay because we also note that over longer terms, depending on your investment horizon, the stocks can stay oversold for longer periods and still go up. But look at this, the 21-day moving average here in red's crossing the 50-day. It's about to cross the 100-day. It's got some upside here right into the 200-day moving average. You notice that it's sitting here right around 60 cents. There's some resistance, but going back, you can see this top where gold went down was around 92 cents. And this is the volume profile line. And what that does is it acts kind of as a magnet. It will lift prices, will come back up and retest that at some point. And so what's really cool about Zacatecas Silver is when you look at the share price, it's an opportunity, whether you're just getting into investing and trading or you're a long-term seasoned investor, everybody can participate. So let's go back and look here. We can see right now it's trading around 45 cents a share. It's got some upside potential here as it moves back into this heavy zone of volume at 80 to 92 cents. And if it breaks out above that, if gold starts to go higher, well, the upside potential here for Zacatecas Silver is absolutely huge. So again, let me just go over in case you missed the website. I'll put that in the description. The symbol ZCTSF if you're in the US. Again, ZCTSF. And if you're in Canada on the TSX exchange, look up the symbol ZAC. I'm going to be looking to take a position in this tomorrow. I think the opportunity here is huge. So hopefully you'll join me. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.